Okay, so a very good morning to all our viewers. Thanks so much for taking the time out of your day to be with us. I hope we're all safe and well and ready to tackle the second part of Forex Basics. This is going to be a reasonably extensive presentation. So for those interested in a recording of the webinar, the FP Markets support team send out an email to attendees shortly after the presentation concludes. But as usual, you can also view the recordings either on FP Markets YouTube channel or within the Traders Hub. So just a quick check, can we all see the welcome slide and clearly hear the audio? Please feel free to reply in the chat box, guys. Excellent, thank you. Okay, okay, superb. So this is a present. Okay, just 1 second. We've only got one replying yes. Can everyone see the welcome slide and hear me? Just making sure. Okay, excellent. Thanks, Chris. Thank you, guys. Excellent. Okay. So this is a presentation, so a follow-on from part 1 last week, where we touched on the differences between technical analysis and fundamental analysis, as well as the differences between a market analyst and a trader. We also looked at the basic framework of the FX market, its size and the most actively traded currencies. And we also highlighted how currency pairs are generally classified. So, i.e. the major, minor, and exotic currency pairs. Similar to last week, this presentation is aimed at those not really familiar with the FX market, or those just getting their feet wet, shall we say. Though, as I said in the previous webinar, I welcome all experience levels, as it certainly keeps me on my toes, for sure. So the reason we're holding these presentations is to essentially allow you to learn through interaction. Therefore, please feel free to ask any related questions. There are no silly questions about trading as far as I'm concerned, as we all had to begin somewhere. So let me just, as always, before we roll things over, let's just quickly run through the disclaimer on screen. It basically informs viewers that information presented in this presentation is intended for general advice only, and none of it should be relied upon as personal advice. So FP Markets do not take into account your investment objectives, financial situation, or particular needs. So really then, what this means is what we discuss in this webinar should not be seen as investment advice. Moving swiftly on, for those not present at the previous webinar, I'll just quickly run over who I am and briefly introduce topics of focus for this presentation. So my name's Aaron Hill, and I'm part of the research team here at FP Markets. I've been involved in the financial market since about 2010, as I underlined in the previous webinar. I was incredibly lucky to begin under the guidance of 2 consistently successful traders. One has since retired, though the other is currently active. In terms of qualifications, I completed the CFTe levels 1 and 2 in 2019 and 2020, and have enrolled on level 3 this year. I also recently received the CFTe qualification from the International Federation of Technical Analysts in 2020. Okay, and as for trading, for me personally, I like to keep things as simple as possible in my approach, adopting things such as price action, Fibonacci, the relative strength index, and chart psychology. These are aspects we have plans to go over in future webinars, working from beginner to advanced. I've as I said in the last webinar, I've yet to meet a trader that knows or understands everything. So, I'm a great advocate for furthering education in the markets, with seminars and webinars such as this. Again, guys, I would also recommend checking out Gary Burton's webinars on behalf of FP Markets. His analysis and technical knowledge is top-notch, in my opinion. You can find these under the webinars tab on FP Markets. Also consider checking out Gary's analysis along with my own analysis provided in the FP Markets Traders Hub. As for presentation topics, we're targeting 2 core subjects today. The first point is the organization of a trading chart. So here we'll look at its basic arrangement and where to find the key functions. This is crucial to understand, as you'll spend a lot of your time operating from here. Today we'll be using the basic MT4 chart, so though be aware, MT5 is a popular platform, and as is FP Markets IRS platform. On top of this, ladies and gents, we'll also be diving into a fascinating topic, namely the factors behind trading success. And then following on from this, we'll be looking at taking on any questions. As usual, if I'm unable to get to all questions today, please feel free to go ahead and send them to support@fpmarkets.com, and they'll be happy to reply as soon as possible. Also, do not hesitate to send in your suggestions for future webinars to the email. Certainly, if there's enough demand, we'll be sure to create a presentation. So to make life a little easier, let me just slam dunk that email in the chat box for you guys. 1 second. Okay, you should all see the support email now. Okay, so what is a trading chart? When first looking at trading charts, I admit it can seem daunting. In fact, I know many newbies compare it to things like a heart monitor. Clearly it's beyond the scope of this presentation to cover each aspect of the chart's features, though I'll make sure to cover enough to get you on the right path here. I must say I'm certainly not an MT4 expert, but I know enough for what I need on a daily basis, and hopefully this provides a foundation for newer traders here. Excuse me. So a trading chart, right? A trading chart in the FX arena ultimately displays the exchange rate between 2 currencies formed by way of a currency pair, which is something we talked about last week. So just as a quick reminder before we hit the charts, on the slide you'll see the euro-dollar currency pair. With the first currency representing the base currency. So the base currency is what traders buy and sell when a pair is traded, and represents 1 unit of currency. So in this case, that'll be 1 euro. The second currency listed in a currency pair is called either the counter currency, quote currency, or secondary currency. So a counter currency is what the base currency is valued in. If you buy 100,000 on euro-dollar, you've effectively bought 100,000 euros and sold the equivalent amount in US dollar. So as in last week's presentation, if the euro-dollar exchange rate is $1.20, this means you've actually sold 120,000 US dollars to obtain 100,000 euros. Okay, so as a rule, the profit and loss is denominated in the quote currency. Therefore, if the quote currency is not the same as your trading account currency, this has to be converted. But there's really no need to dive into the calculation here, as FP Markets and most other brokers perform this calculation for you automatically. However, I mean, for those interested, there are plans in the future to create webinars explaining the calculation formula. Right, so let me spin things over to the MT4 platform where I'll try and, shall we say, freestyle demonstrate the basic features on the chart. There's no plans to go into the process of opening a demo account, as this was covered by my colleague Isaac in Tuesday's webinar. The MT4 crash course, which is available on the FP Markets website under the webinars tab. Just give me a second and I'll spin this over. Okay, you guys should be able to see my my FP Markets demo account right here. Excuse me. So the chart displayed is the euro dollar chart, which can be seen at the top left corner. This is also a demo account, which is essentially a simulated practice account, something which I would recommend all traders use, especially at the beginning of their journey. Okay, let me just give me a second. Okay. Right, so the x-axis. So the first thing to consider on a chart is the price and time axis. And guys, I just have to remind you, this is the core basics. So for any experienced traders here, you will understand this. Okay, so as I said, the first thing to consider on the chart is the price and time axis. The x-axis, the horizontal line, shows the time period, which can, it can be anywhere from tick data to yearly data. And the y-axis, which it shows the price of a currency pair or that of any security you trade. An easy way to remember where the y-axis is on a chart is to simply remember y to the sky. This is something I was taught very early on as a child in school, and well, let's just say it certainly stuck. So let's move on to the main interface of the chart. Each chart has its own color scheme. Where this will be different for most traders. So to alter the color scheme, you can simply smash F8 and modify the colors here. So as you can see, we have three options on MT4: yellow on black, green on black, and black on white. To apply this color arrangement, just go ahead and click whichever you desire. So right now we have the black on white version, but if I wanted to go for the the funkier yellow on black, just simply click on this scheme and press OK. To go back to the black on white version, we just simply repeat this process. So press F8 and then select the color scheme black on white. Okay, moving swiftly on to the chart types for MT4, which consist of a line, candlestick, and bar chart options. These can be found at the upper panel here. So we have the line chart, candlestick chart, and bar chart. Also, before we look at this, please do note that you're able to zoom in and out of the chart by simply clicking on the plus and minus magnifying glasses here. This is fantastic for especially price action traders. So now a line chart, let me just click over to that. A line chart is formed by joining closing prices of a financial instrument. A line chart, helps display summary statistics. You'll find a lot of financial journalists use these a lot. The line chart is also commonly found in correlation analysis. This is a method essentially comparing the strength of markets with one another. So onto the candlestick and bar chart options. So a candlestick and bar chart use identical values, that being, let me just zoom in for this, that being an open, high, low, and close. Now, the open for a bull candle is found at the bottom of the candle's formation, and the close at the upper range here, at the upper range of the candle's body. We also have upper and lower shadows, this being the upper shadow, this being the lower shadow, which, you know, these are often referred to as upper and lower wicks. And the range between the open and close is called the real body. The clear difference between candlestick charts and bar charts are the body. The candlestick exhibits a more fuller presentation, while the bar charts show the body by horizontal lines projecting from the vertical. Also, do remember you can change the colors of the candles to suit your preferences. You can simply do this by F8, and so where do we have this? So the bull candle and bear candle. At the moment, we have the white candle for a bull candle and black for a bear candle. Now, you can also change the outline of the candles here, bar up, bar down. But for this, I mean, it's pretty self-explanatory. So if you wanted to change the bull candle to a traditional, so a more traditional, I guess, green and red, you can simply do that via this. Generally, I leave the candle outlines as a default in black. Okay, so another thing worth pointing out is that there are various Western bar chart patterns and Japanese candlestick patterns that can be developed from these charts. But this is something for another webinar. However, you know, there's the popular ones are, you know, we have the hammer formation, which I'm sure most have heard as a bullish pin bar. We also have bullish and bearish engulfing patterns. There's so many. Actually, guys, if you're interested in learning about Japanese candlestick analysis, I would highly recommend the book by, I believe it's Steve Nissen. I'm not sure of the full title, but Japanese candlestick analysis. But if you search Steve Nissen, the author, I'm sure you'll find the book. But it's very detailed. Okay, so on to the bid and ask line. This is something we looked at last week, but we didn't really go into detail. So the Market Watch window, which can be found using Control and M, or by simply clicking the Market Watch tab here, displays active. Let me just extend that. Just give me a second, guys. So it displays active bid and ask quotes. Also, usually the bid price is displayed as a horizontal line on the chart area. As you can see here. In the common tab under the properties window, if I remember correctly, which again can be accessed from F8, you can also, let me just get to column tabs. You can also click the show ask line right here. Which will then display both the bid and ask line together. You won't see this on the daily chart, but if you go down to time frames such as the M5, you will certainly see both values. Here we go. So something to bear in mind is that when you place a sell order, your trade will be executed at the bid price and the buy order at the ask price. This is actually, you know, very important to understand, as I see a lot of newer traders struggle with this, and they often get confused why their order wasn't filled. So another important aspect is the difference between the bid and ask, which is called the bid and ask spread. So basically, this is the difference between willing buyers and sellers. So if we just have a quick look at the order window, which can be found by pressing F9, we can clearly see the bid and ask levels displayed here. So here is the current bid for euro-dollar and the current ask for euro-dollar, and in between, as I just said, the bid and ask spread. Guys, is everyone following this? Are there any questions or anything? Because most are quiet right now. But as I said, feel free to ask any questions. I'll be happy to stop and answer them. Okay, so just moving on. Okay, so the next term is pips. Let me just delete these boxes. Remember in the previous webinar, we briefly touched on this. So a pip is an acronym for, thanks Shane, thank you. Remember in the previous webinar, we briefly touched on this. It's an acronym for percentage in point. The smallest price movement any exchange rate can, essentially make. So it measures the amount of change in the exchange rate for a currency pair. It's also worth noting that most currency pairs go out to 4 decimal places, but there are some exceptions like the Japanese yen pairs that trade out to 2 decimal places. Some brokers, however, they go out to 5 and 3 decimal places. As you can probably see from the chart, FP markets work this way and essentially include pipettes, which is a fraction of a pip. So on the euro-dollar chart, let me just spin back to the daily chart. You'll note there are 2 horizontal levels applied to the chart. Let me just zoom in so it's easier to see. You'll note that, as I said, there are 2 horizontal levels at 21,656 and 21,101. The difference between these 2 values is approximately 0.0055, which equates to 55 pips. For this calculation, so this is simply 2165 minus 2110. So I've not included the 5th values, which, as I recently highlighted, are generally termed as pipette or a fractional pip, so 1/10 of a pip. So in this case, the fractional pips are 6 and 1. Now, personally, I never include the fractional pips when looking at pip calculation between 2 levels. It's just so minor, it just doesn't seem to be worth including. But you can include that if you feel it's necessary. Newer traders should not worry about this. Guys, don't worry about this if it's too overwhelming. We intend to go over everything in more detail in future webinars. The main point here was just to highlight some of the aspects you'll see on your own trading platform. Okay, so now moving over to time frames. On MT4, there are 9 time frames, while MT5, we have a whopping 21 time frames. MT4's time frames can be found on the upper right panel here. On MT4, we actually have the option of selecting time frames as high as the monthly time frame, right down to the 1-minute time frame. Now, of course, the minute time frame will display a bar or candle each and every minute, while a monthly chart will only paint a new candle each and every month. So another point to bear in mind is that time frames used will depend on your individual trading style. So I don't really want to confuse, but this is worth touching on the 4 main styles of trading, namely scalping, day trading, swing trading, and position trading. So the differences between these styles is based on the length of time that trades are held for. Scalping trades are generally only held for a few seconds, at most a few minutes. Day trading positions are held anywhere from a few minutes to a couple of hours. This is where you'll find that most traders liquidate their positions at the end of the trading day, hence day trading. Swing trades are usually held for a few days, while position trades are held anywhere from a few days or weeks, or in some cases several years. This is more of an investment style of trading. So a scalper will typically watch the M5 and M1 time frames. Day traders tend to focus on M15 to the H1 time frames. Swing trading generally generally focuses on the H1 to H4 timeframes and sometimes even the daily chart. While position trading, this is more of an as I said, this is more of an investment approach. So the daily, weekly, and monthly timeframes are often used. Guys, again, the trading styles I've just briefly touched on there is, it's a little advanced for beginner traders in my opinion. So please don't worry if you don't understand or what's being presented here right now. As long as you understand that your trading platform offers different time frames to view and dissect price action, this is what we set out to achieve. Okay, just moving swiftly on, please. So yeah, there are a number of drawing tools on MT4, which is particularly useful for price action traders. Can I ask if anyone here trades or has looked at trading price action, as that is what I mostly focus on here. So guys, do any of you trade price action or have looked at it at all? Just ping in yes or no. Thanks, Shane. Shane, is that your main strategy you use? Okay, all right. Okay, thanks, Maddie. All right, okay. Can I ask if anyone trades with indicators? Okay, Shane. Yes, I try to use a trend following system. Yeah, good man. Yeah, very good. So you include indicators as well, I would imagine, with price action, maybe, or just maybe you use trend lines and support and resistance. Okay. So at the upper panel, we have, you will see no to a few indicators. Okay, thanks, Shane. Brilliant. Okay, so at the upper panel, you will see we have a range of options, which are often used to plot support and resistance. So we have the horizontal lines, as I said, these are often used to plot support and resistance. So these are easily movable up and down the chart, no problems. You can also right click? Done this so many times now. Yeah, right click, horizontal line properties, and you can also set the parameters to the price level you desire. We can also look at trend lines. So let me just zoom out for this. So there is a way to draw. There is a correct way to draw trend lines. Then traders they usually take on their own methods. So, but I'm going to show you the textbook way of drawing a trend line, which let me just find. So the textbook way of drawing a trend line would be starting from the extreme out from here. Or we could even use this area here, there, or here even now. Okay, so so to expand on your available drawing tools, simply go to Insert, Indicators. Oh, sorry, not Indicators. Insert, and you'll be able to see the drawing tools here. So there's things from shapes. You can draw the rectangles on your charts. This is good for supply and demand traders. You can also add channels, Fibonacci, retracements and expansions. So there are a number of options on MT4. So in terms of technical indicators, these can be accessed again by clicking on Insert, Indicators, and then selecting the indicators you need for your system. So if you want to apply, say, the RSI, the Relative Strength Index, you would go to Oscillators, Relative Strength Index, accept the default calculation, and it will then appear on the lower panel of the chart as so. Right, and finally, let me just take a quick look at the order window on MT4, which, as I said previous, we can access by F9. I find a lot of people get confused with this, especially newer traders. so it's really good if we can just go over this real quick. So the symbol here represents the market you'll place an order on. So in this case, it's the euro versus the US dollar. So next up, so we can select this. We can also select which currency pair you're going to you will trade. But generally, if you're looking at a chart, which is the euro dollar, it will automatically come up with euro dollar here. So you shouldn't really have to trade this, change this if you're trading from the chart. So next up is volume. This can sometimes catch a few newer traders off guard. Most brokers, there are three types of lot sizes, namely standard lot, mini lot, and micro lot. So in terms of the MT4 volume input, if you wanted to take on a 1 micro lot position, you would simply show 0.01. But for a 1 mini lot, you would need to type in 0.10. And as for a standard lot, you would simply go and select 1.00. As a heads up, we do have plans in a not too distant future to create webinars that focus on position sizing, so please do keep an eye out for this. Okay, moving on to okay, so the sections with stop loss and take profit. This is pretty much self-explanatory, but it is here you input the price value you want to exit the trade, and both as risk management and in terms of your take profit objective. I would always recommend using a stop loss order when trading. I would never recommend entering a trade without a stop loss, because there's been times where I've been trading and it's moved in the space of seconds, and I'm in a real bad situation, especially when it moves against you. But if it moves in your favor, that's fantastic, but it's just really not worth the risk, in my opinion. With FP markets, we also have two types of orders on show, the market execution and pending orders. So guys, look, market execution is for me, it's the most basic type of trade execution, and you know, it's used to buy and sell at current market price. So with that, trades are executed at current ask. So current ask and current bid prices. The advantage of using a market order is that, you know, it guarantees that the trade will be executed, though it cannot guarantee a price, unlike a pending order. So a pending order is in place to buy and sell at a desired price. In a pending order, a trader can select a predetermined price to buy and sell. This gives you some security as the price you select. Pending orders are also used to execute a trade at a position sometime in the future. Okay, and also with a pending order, you can set let me just click on to. So this is the pending order section. You can select buy limit, sell limit, buy stop, or sell stop. So a buy limit is an order. A buy limit is an order that you would normally set, you would always set below the current price. A sell limit is always above current price, and with a buy stop and sell stop. So buy stop and sell stop orders are generally used for breakout traders. So a buy stop would be above current price and a sell stop would be below current price. I believe once these are triggered, they are automatically market orders. So guys, I apologize if this, one more thing just quickly, and the expiry. So with a pending order, you can set the expiry date. So this means when you want your pending order to be withdrawn from the market, you can automatically set this here. So guys, look, I apologize if this was a bit of a mouthful. I'm trying to get as much information across, but at the same time, I'm trying to take into consideration we likely have some newer traders present, and yeah, I'm just trying to make it as easy as possible to understand. So if you guys just give me a second, I just want to spin things back over to the PowerPoint slide. And And we look at tackling some of the factors behind trading success. Let me just click over. Okay. So first up, we have backtesting. You know, some traders say backtesting doesn't work. Yeah, you know, I think this largely stems from the fact that market conditions constantly change, right? So factors affecting the market in the past may have little relevance in present day markets. You know, for me, my own personal experience with backtesting has, you know, it's been reasonably positive. In fact, I find it incredibly difficult to have confidence to engage with markets if I did not backtest. You know, backtesting is a process whereby the trader works with sample trades. For instance, before I even consider a strategy, it has to go through at least 20 to 30 sample trades. From there we can, you know, I can analyze the results and build. So you can, so once you have these sample trades under your belt, you can ask questions such as, you know, is there a different entry technique you could have applied during those 20 trades, or could you have altered the stop loss placement to improve the overall return? So in essence, you know, it can help traders optimize and improve their strategies. It can also help find any technical flaws, you know, as well as this is one point I really want to drive home. It gives you confidence in the strategy before applying it to the real world markets. A backtest can also highlight the win-loss ratio, as in how many trades produced a winning scenario over a losing scenario. Personally, you know, I've always found some people hate backtesting, but personally I find backtesting an enjoyable task, actually, because it truly does give me confidence in any system I'm looking at, especially when you've got live money on the line. It's very important for me. So backtesting for me could be as basic as working candle by candle on MT4 or MT5. Though I know there are a number of trading packages available to speed this process up. So I know TradingView offer this service, tradingview.com. We actually use this. Well, I use this for my analysis on FP markets. I believe it's free of charge for the chart service, but it's a limited chart service. I may be wrong here, I'm not sure, because we use the paid version. Also, a software package called Forex Tester has proven incredibly useful for me. I'm not sure if any of you guys have used that before, but Forex Tester is really easy to use. And in fact, if you guys are interested, I'm currently testing a system of interest, and I would be happy to show my results and the process I'm going through in another presentation. Though it's quite a complex strategy, which includes stop runs, me trying to participate in the stop runs. So yeah, but this is at current, my FX tester results are really good. I've only been doing it a few days right now for this for this system, and I've taken 8 trades, and I believe the account is up 22%. But bear in mind, I'm risking 3% per trade, which is high for me. Normally, I go for 1% or spot 5%. It's just a test, though. Yeah, so as I said, if you guys are interested, I'm more than happy to show you how I go through my backtesting process in another presentation. Okay, so most traders. Okay, so the subject most trade. Oh, excuse me. So the subject most traders despise is losses. I touched on this. Excuse me. I touched on this in part 1, I believe. So most starting out in the Forex market view a loss as a bad thing. I believe, you know, they see it as a way of signaling that they did something wrong. The successful trader doesn't view a loss as a bad thing. It's also not something, you know, the market set out to do to you. The Forex market doesn't know where you entered or where your stop loss order is located. You know, unlike you, unlike us, the market is always neutral. So when you lose, it's a matter of reflecting on, it's just my opinion, guys. It's a matter of reflecting on what you could have done better. Was it your fault? You can ask yourself, was it your fault? Was it a fault of your own? Did you not follow your trading rules, or was it just simply a loss? If it's just simply a loss and you followed all your rules, you simply have to trade on. You cannot get bogged down by losing trades, which is something which backtesting helps a lot, especially for me. It gives you the confidence to trade on. So, but without them statistics, it can prove really difficult, especially when, as I said, when you've got live money on the line and you're taking loss after loss. It can really get a lot of traders down, especially after two to three consecutive losses. There's not many traders that don't get affected by that. So as I said, backtesting is key for me. As I said, don't get me wrong, nobody likes to see a trade go against them. I don't care if you've been trading for 1 month or 10 years. It's always more enjoyable to make money than to lose it. I'm sure we can all agree on that. That being said, just because a trade doesn't go your way, it doesn't mean you should take it personally. Thinking this way will only dig you a deeper hole. The successful Forex trader has the mindset that a loss is, well, most successful traders, I believe, have the mindset that a loss is simply feedback. So next time you have a loss, try and take it as constructive feedback. Analyze the situation to see how you can improve next time. But guys, look, keep in mind that even though you have an A+ setup, you could have 3 consecutive A+ setups. When I say A+ setup, I mean a setup that has proved fantastic in backtesting. So you could have 3 of these in a row, and 3 of them may not work out, but it doesn't mean the system is faulty. You guys may also remember last week I recommended a book titled Trading in the Zone by the late Mark Douglas. Now this is an awesome book, and it really simplifies trading psychology and can help with most issues. So as far as I'm aware, the FP Markets marketing team ordered 3 versions of this book, and will select 3 winners randomly via the emails, and the winners will be contacted by FP Markets marketing team to arrange delivery. Guys, this is a must read. The book has fantastic reviews, and rightly so. So one thing you will take away from a big takeaway from this book is, so when you're trading a system, a trade by trade, so how do I say this so it comes across clear? So an individual trade does not mean anything. A loss or a win does not mean anything. You cannot look at it on a trade by trade basis. It has to be, you're working with probabilities, right? So you're not working, so we get down, some traders get down when they lose 1 trade, but that doesn't mean anything in the overall scheme of things. You're going to take hundreds of trades every year, and 1 trade, what does that mean? As long as you're following your rules, let me clarify that you have to follow your rules, and as long as you're following your rules, your trading rules, 1 loss should not really dent your performance. 2 losses, 3 losses. If you work it out on paper, just write down your wins and losses. It really doesn't matter. It really doesn't matter. So on a trade by trade basis, you need to kind of step aside and let the probabilities play out, which I must clarify should have been found in your backtest. As again, backtesting is incredibly important for me, as I want to work with them statistics. I can't work with live money and not know the statistics to the system. That would just drive me insane, because you don't know you haven't got any idea of what you can potentially expect. Okay, so on to the next one, mastering 1 strategy. Be it price action or a combination of price action and technical indicators, it's important to understand that focus might be better directed to mastering 1 strategy at a time. So I know some professional traders who employ more than 1 system, but they have been in the long game, in the game a long time, and spent and spent time assessing the strategy's suitability. So moving on, a trading plan. This is your blueprint for trading. It's your map in place to guide you from A to B. Among other things, it should include your trading strategies, your entry and exit formations. An overall trading plan. It should also include risk and money management systems. Now, for newer traders here, risk management is a key component to successful trading. For me, guys, trading without risk management is, it's akin to gambling. As a trader, you must look at a long-term return on your investment, not, the jackpot run. Some parts of a risk management system to look at are things such as, only trade with money you can genuinely afford to lose. This should be obvious, really. You shouldn't really trade with money you can afford to lose. It should be cold money. Certainly, do not go and trade, rent or mortgage money. It's just not a good state of mind to be in when you're trading the markets. Another thing to consider is the use of stop losses to limit any downside. I know some traders say using a stop loss is not worth it, but I'm only speaking from my experience, and it truly is worth it. It saved me countless huge losses. I will never ever trade without a stop loss. So yeah. Also, another thing is assess your risk tolerance. Are you comfortable losing 200 pounds or dollars? Don't be worried if you're only comfortable risking $20. That's fine. Find your balance and build confidence from that value. This, of course, will depend on your experience level and investment goals. Another important thing to consider is the risk-reward ratio. This is a slightly advanced topic, but traders would set risk-reward ratios of 1 to 3, 1 to 2, or anything along those lines. This is something you should take into consideration, and it's worth researching, in my opinion. Also, it's vitally important to consider leverage. This is something we also have plans to cover in future webinars. Right, okay, guys, the next point is incredibly important. Excuse me. Trading is not a game. It's not a hobby. It's not something that can be learnt over a weekend, irrespective of what is advertised on the internet by so-called trading gurus. As I said, as I briefly touched on in the last webinar, how many times have you been on YouTube? If you go if you search trading on YouTube and the advertisements that pop up now, it's insane. I was actually talking to my mentor about this recently, and he says it's just insane how many people are gurus now in trading, and they're showing little proof that they can actually trade. Just be very careful who you trust to learn about this business, because in my opinion, there's only a few that really know how to trade. Yeah, the main point is just be very careful who you choose. I mean, if these guys are traders, why would they need to spend so much time advertising and stuff like that? Yeah, I understand it could be a multiple income streams. I do understand that, but most of the successful traders prefer to. They're very quiet. You rarely see them on forums. Saying that though, I do see a couple on forums, and I know a couple on forums, but it's only a couple out of the hundreds or thousands that are on the forums. For me, I initially treated trading as a hobby, not listening to my mentor. One particular case I vividly recall was the point of a trading journal. So I remember it to this day. This was about 10 years ago. I remember my mentor advising me to begin a trading journal, and I didn't bother. Our next meeting, he asked to see it, and let me just bear in mind, he actually explained what to do and spent the time explaining how to create this. And on the next meeting, I didn't have anything to show. I still remember his face to this day. He didn't say anything to me. His face was enough to make me realize what a fool I was believing I knew better. From that point on, I followed all the advice given, and you know, things have improved dramatically. Look, guys, the main takeaway from this is to treat this business seriously. Set structured times for study. Test one system at a time. Do not get thrown off by 1, 2, or even 3 consecutive losses in your trading test. This is normal. I know it's difficult. I really know that's difficult to not suffer, but to take on loss. It's not in our DNA, is it, as humans? But this is one of the hurdles you need to overcome to reach a certain level of consistency in your trading. And again, that book that I recommended, Trading in the Zone, please do read that. I've got no affiliation to their company or anything, but please do consider reading that book. It's fantastic. It's an absolute fantastic read. As I said in the last webinar, I've read it 3 times. I also have the hardback version as well. It's just fantastic. It will really open your eyes to how simple trading should be. It really is a must read. So look, guys, essentially you have to become a student of the markets and develop a system based on your testing, which has proven to give you an edge over time. So when you do encounter a losing trade, or as I said, consecutive losing trades, you will have the confidence to continue as you know it happened before. Okay, so right, Q&A. Guys, do we have any questions? I know I went on a bit of a rant there. If there are any questions about the content or some of the factors I've mentioned, please go ahead and ask me them now, and I'll be happy to answer them. If there's no questions, I'll okay, it's pretty blank. Okay, I don't think there's any questions. So in that case, I'll wrap this up, I believe. Okay, thanks, Shane. Hi, Tim. Sorry. Yeah, is it possible to watch this later, Tim? Yes, it is. Yeah. I believe there's no, I don't believe, I know. FP Markets will be sending you an email following this presentation with the recording, and you can also watch this on FP Markets YouTube channel and also under the FP Markets webinars tab on their website. How do you get in the right mindset? From Shane. That's a difficult one. Again, Shane, please consider that book. I mean, you can even if you have a Kindle on Amazon, I think it's available on Kindle. Trading in the Zone by Mark Douglas. That's all that book talks about. And also, guys, if you're interested, there's actually a free YouTube. There's a free YouTube channel, not free, yeah, free, where Mark Douglas actually talks through in different parts. It's really good. It's about 4 to 5 hours long, like in 4 different parts. Just search Mark Douglas on YouTube, and you should be able to find that. And that, Shane, will tell you all about the mindset. You know, it's better to come from him than me. He's the expert at that. But it's fantastic, and it really will open your eyes. I mean, I've listened to these these series from Mark Douglas a number of times. It's always good to remind yourself, and I've always learned something different every time I've listened to him. So yeah, it's definitely. So for me, don't look at trades on a trade by trade basis, Shane. Most definitely do not. But to get in the right mindset, it's a process, in my opinion. You need to back testing is key for me, really key for me. Without that, it's incredibly difficult. I don't know how people do it, in fact, but there are some people that do it. I just cannot. I need statistics. I need something to back up my my system, because if I get losses, I'm like everybody else. So if I get 3 consecutive losses and you have no statistics to back that up, how do you know this won't continue? I mean, how do you know its effectiveness? Obviously, I understand history cannot predict the future. I understand that, but it's just having that confidence in your system that you've done the work beforehand. Look, guys, this is not an easy way. This is not an easy career. This is not something you're gonna It's not an overnight career, let's put it that way. It's going to take years of hard work and hours and hours of study on the charts as well. And yeah, the main thing I can say to you is, especially newer traders, is focus on your psychology, because it's just so important, and something I didn't focus on for a long time until I actually started listening to my mentors about that. But that's what I'm trying to get across to you guys, especially newer guys. Some of you experienced guys will probably already know about psychology and stuff like the trading psychology. I'm no psychologist, by the way. I'm just saying trading psychology, as in, look, backtesting. Just focus on backtesting, and please do try and read that book. If you don't want to buy the book, just go onto YouTube, click it, type in Mark Douglas Trading in the Zone, excuse me, and there's so much information that you'll find online of him. What do I see? How do you get in mindset the previous week? Yes, Tim, you can also see the previous week's webinar as well. That's also on the FP Markets YouTube. I've seen that. Angelica, we can receive an e-certificate after this. I'm not sure. I don't think there's a certificate for this this webinar, Angelica. No. I looked at my last. No, I'm not too sure how to pronounce your name, Lena. Yeah. So this is what happened to me. Especially, I looked at my losses, and I thought this wasn't me. So it's it's quite debilitating, isn't it? It's you look at your losses and you think, and you take it personally. But please go over. I mean, when I say backtest, I don't mean test. I don't mean test a 10 trades. I mean, for me, I need at least 300 samples to be ultimately confident to go into a live market. 300 trades, but I work from a basis of samples, so 20 to 30. As I said, guys, look, if there's demand for it, I will happily take people over the current backtest I'm doing right now on my FX tester. It's producing very good results. I'm very confident in it. It's a very complex system, especially for newer traders. Some of the advanced guys will very easily understand it, I'm sure, but it's working out very well. But I can take you through the process I'm going, and I'll likely have a lot more trades by that time as well. At current, I only have seven trades. What advice would you begin the beginning screen? So Anthony, for me, if I understand the question correctly, so for me, I would always look at only one pair. I would analyze one pair first. So for my back test, I analyze one pair, and I work from that. So if that pair is successful, that goes into my successful pairs pot, if you will. So I know I can trade that with confidence on the system I have tested. So that goes into that pot. So then I test the pound dollar. So currently I'm testing the euro dollar, and next I'm going to test the pound dollar, the Aussie dollar, most of the major currency pairs. And then I'll move on to the minors. It's a long process, guys. It's not an easy process, but it's certainly something I would never trade without, especially with live money. Where can I read about? I hope that answers your question, Anthony. Where can I read about backtesting procedure? Look, I'm not sure how to pronounce your name, but where can I read about the backtesting procedure? This is, guys, look, as I said, if there's demand for it, I'll happily take you over my backtesting procedure. It's not going to be the same as everybody else's, but it's working for me. But if you want to read about it on Google, just simply Google it into just Google backtesting procedures, and there'll be, I guarantee you, there'll be thousands and thousands of results, millions probably. And but I would just be careful of any courses teaching you how to backtest, because there really is no need. It's all available for free on the internet. Okay, so guys, that's all the questions, I believe. Excellent. So look, again, guys, if there's anything specific topics you would like the team here to talk about, please be sure to send your suggestions to fpmarkets@support.com. I think it's fpmarketsupport.com. Let me just read that. Yeah, support@fpmarkets.com. Also, do make sure to register for the FP Markets Telegram channel to get instant updates. The sign up tab can be found at the lower left part of the FP Markets website. Likewise, feel free to check out the FB Markets Trading Hub, packed with educational materials and analysis. Okay, and on that note, thank you all so much for taking the time out of your day to attend this presentation. I really hope you took something away from it, especially any newer traders here. As I said, please do send feedback. I will personally read this. Have a great day, and I'll see you again real soon. Thank you very much, guys.